Today, Bitcoin kicks off the week at the $87,000 level. And Grayscale's Pandl discusses the crypto-focused asset manager's market outlook for the new year. Welcome to CNBC's Crypto World. I'm Mackenzie Sagalos, taking a quick check of prices as we kick off the week. As of noon Eastern, major cryptocurrencies are slightly in the red, with Bitcoin hanging on to the $87,000 level and Ether trading just below $3K. XRP fell by about 1/4% to $1.86. Those moves lower coincide with stocks, which fell today, spurred by losses in tech names after the S&P 500 scaled to fresh records just last week. The AI trade coming under a bit of pressure this morning. Nvidia, Palantir, and Meta platforms all suffering losses. All right, let's jump right into our main story. Grayscale recently released its 2026 Digital Asset Outlook report, focusing on topics including crypto regulation and ETFs. Crypto World's Talia Kaplan spoke with Pandl, head of research at Grayscale, about the report and what we can expect to see in the year ahead.
Grayscale released its 2026 Digital Asset Outlook this month, dubbing next year as the dawn of the institutional era. According to your new report, Grayscale expects 2026 to accelerate structural shifts in digital asset investing, which have been underpinned by two major themes. One, macro demand for alternative stores of value, and two, improved regulatory clarity. Now, Grayscale writes that these trends should bring in new capital and broaden adoption, especially among advised wealth and institutional investors. You were integral in putting this report together, so can you elaborate on how these trends can help achieve broader adoption for the asset class?
Absolutely. Look, these are the two big pillars of the bull market that we've seen to date. One is demand for alternative stores of value. There's a lot of things happening in crypto, many different types of technological developments and use cases of blockchain technology. But the biggest asset in the market, Bitcoin, is driven because of demand for alternative stores of value, because of debt and deficits and the risk of fiat currency debasement. This drives interest into our asset class. I think that continues as we move into 2026. I don't think these macro imbalances and the portfolio shifts that they are creating are going anywhere. And then the second big piece, of course, is that regulatory clarity for this technology. Blockchains are financial technology at their heart, and so they do require a comprehensive regulatory framework to make sure that consumers are protected, that the financial system is protected as the technology gets bigger and bigger and more deeply integrated into the mainstream financial system. It's been a long journey on that path. How I like to think about it is in 2023, Grayscale won its lawsuit against the SEC over Bitcoin ETPs. In 2024, Bitcoin and Ether ETPs came to market. This year, 2025, we saw the Genius Act, lots of other regulatory changes. Next year, we think that continues with market structure legislation passing the US Congress. So demand for alternative stores of value, regulatory clarity for us, these are the big pillars driving the bull market in crypto over the last years and likely to continue in 2026.
Focusing on the regulation component, many people in the industry were hoping to see a crypto market structure bill become law here in the US before the end of the year. That didn't happen, in large part due to the longest government shutdown in US history. Senate Banking Chair Tim Scott said that the committee has made strong progress with Democratic counterparts on the legislation and that a markup is in fact expected in early 2026. What's your outlook for crypto regulation in the US in the new year, and how will that change the crypto landscape, expanding on what you just told me?
Yeah, absolutely. Look, it can be easy to forget where we were at the beginning part of this year, where the US government had investigations and lawsuits with many leading crypto industry companies. We've come a very long way this year in terms of the operating environment for businesses in crypto in the United States. However, there is still a long way to go. Many assets in the space, many institutions in the space still do not have a clear federal regulatory set of guidelines. And that's what we need from this market structure bill. You're exactly right, Talia. The timeline got off track with the government shutdown, but looks like we are on track in January or Q1. Look, what I want to see is bipartisan progress towards this legislation, even if it doesn't get done. I think it will get done next year, but bipartisan progress, that's really the key. We want to make sure that crypto remains a bipartisan issue. That'll help us grow and evolve alongside the U.S. financial system in a sustainable way over the coming years and decades. So we think that progress is going to pick back up next year. Now, what are the implications of this? There's a lot of different things. The legislation touches tons of parts of the industry. But in my view, the most exciting piece is that we are going to give regulatory clarity for many types of assets in our space, and probably we'll call many of them digital asset securities. So changing the regulatory status of these securities. And I think giving that clear categorization will also allow businesses to issue tokens. So our expectation is that many types of firms, startups, mature businesses, Fortune 500 companies will issue tokens as a natural part of their capital structure alongside stocks, bonds, and hybrid instruments. We need regulatory clarity to bring that process forward. So that's what I'm looking forward to. I think we're going to get that legislation passed next year on a bipartisan basis, and I think it will stimulate issuance of tokens by lots of different types of entities, something that is huge for our business and huge for the crypto asset class over time.
Turning to price, Grayscale forecasts that Bitcoin will likely reach a new all-time high in the first half of the year. Why do you think that is? And what will it take for that to happen? I'm assuming regulation advancements in that regard is a factor, but what other factors are in the mix?
Yeah, absolutely. Look, I think it goes back to those same two pillars, demand for alternative stores of value and regulatory clarity. Both of these things likely driving ahead for the crypto asset class in 2026. On the macro demand, look what's happening with gold and silver. Look what's happening with the debate around the Fed chair and interest in low interest rates. Look, it's very clear that President Trump wants to see lower interest rates. He has the opportunity to really set the agenda for the Federal Reserve by naming the Jay Powell's replacement. I think next year will be a year of dollar weakness, of Federal Reserve rate cuts, and of strength in gold, silver, kind of physical stores of value, Bitcoin, Ether, maybe some other crypto assets, digital stores of value. I think these things will all benefit from that macroeconomic climate that we are living through. And then on regulatory clarity, look, I think what it requires is passage of bipartisan market structure legislation. I think that's going to happen. And I do think it's fair to say, though, that if it doesn't happen, if we have a breakdown in bipartisan progress on crypto, I think that can be considered a downside risk. So our optimistic view is premised on the idea that bipartisan legislative progress continues. If, for example, it gets sidetracked and crypto becomes a partisan issue in the context of the midterms, I would consider that a downside risk scenario for the asset class.
Now, last time you and I spoke earlier this month, we talked in great detail about spot crypto ETFs, especially because Grayscale launched a spot Chainlink ETF in the US a few weeks ago. According to your 2026 digital asset outlook, Grayscale expects more crypto assets to be available through exchange-traded products next year. Can you take us through the reasoning there?
Yeah, we are seeing really an explosion in the launch of these types of products thanks to regulatory clarity from the Securities and Exchange Commission, which gave us what are called generic listing standards, essentially quickening the process, clarifying the process for bringing these products to market. Talia, you remember that it was a very long battle to bring the Bitcoin ETPs to market. Grayscale played a central role in that battle, but we got there. Now we have a more streamlined process. Grayscale launched a Solana ETF in recent months with staking enabled, an XRP ETF, a Dogecoin ETF, a Chainlink ETF. So all just in the last couple of months. You're going to see that continue as we turn the page into 2026 with really the leading altcoins, the tokens that have real adoption, real use case, real institutional investor interest. These are going to be coming to the market. I think we can expect that process really to carry out all the way through 2026. And I think investors should look for staking rewards to be enabled in basically all cases where it's possible. This has been an important part of the differentiation among these products, is investors seeking out staking. Grayscale delighted to be the only asset manager today staking our Ethereum ETFs at scale in the US market. I think that's going to continue to be a differentiator. So more products, more features like staking. I think more derivatives, options, futures on these products, all of these things will continue to expand in 2026.
Now, your report also points to two topics that Grayscale does not expect to influence crypto markets in 2026. And one of those is digital asset treasuries. Why do you think that is, especially since we have seen a rise in DATs in 2025?
Yeah, we called this our red herring topic. Look, I think it's clear that this is a buzzy topic in the media and in crypto markets, and got a huge amount of attention in 2025. And still, many investors focused on this issue looking into next year. Look, my somewhat out of consensus view is that the DATs will be somewhat of a boring topic as we move into 2026. These are vehicles, public companies that own crypto assets, and we think that they will behave largely like closed-end investment funds, meaning they don't often buy assets and don't often sell assets. In that sense, I think that they will be relatively boring. At the same time, I don't think that these vehicles are going anywhere. We know that there are investors that want to access crypto through a public equity vehicle. And listed companies that are operators in the space, exchanges and other types of businesses, that can be one solution. Digital asset treasuries, that can be another solution. But I don't think that they're going to be major drivers of valuations in 2026, either on the buy side or the sell side. I think they're going to hold these assets, trade close to fair value, and be a little bit out of the spotlight compared to 2025.
Okay, that's all for Crypto World today, but we'll be back again tomorrow, and we'll see you then.